During the last few years, ETFs have become tremendously popular and you might have also heard about them. By investing in ETFs, you can purchase a collection of stocks or other assets in just one fund, and they trade on an exchange just like stocks. However, the problem is that there are literally thousands of options available out there. So which one should you choose? What are the best ETFs to buy right now? What's up guys, welcome back to Glory Investing Show. In our today's video, I'm going to tell you about the 5 best ETFs that will make you rich. However, before we go any further, make sure to subscribe to Glory Investing Show and don't forget to hit the bell icon so you never miss any updates. And yeah, just to let you guys know, if you would like to buy some awesome trading merch, check out www.incomeaddict.shop. There's a ton of different things you can purchase. You can use the code ADDICT at the checkout if you want to receive a discount. Now, without further ado, let's get into this. First of all, you need to understand what an ETF actually is. How do ETFs work? Well, let me tell you. An exchange-traded fund is basically a type of investment fund and exchange-traded product. Well, they are traded on stock exchanges. They're similar to mutual funds in several ways. However, the key difference is that exchange-traded funds are purchased and sold throughout the day on stock exchanges. On the other hand, mutual funds are purchased and sold at their price at day's end. An exchange-traded fund can hold several assets like currencies, stocks, bonds, and commodities like gold bars. And these ETFs divide ownership into shares that are held by shareholders. Exchange-traded funds are attractive as investments because of tax efficiency and low costs. You also need to keep in mind that closed-end funds are not considered to be exchange-traded funds. According to a report published by Bankrate.com on July 7th of this year, an ETF often tracks a specific index such as the Standard & Poor's 500 or the Nasdaq 100, meaning it holds positions in the index companies at their same relative weight in the index. So by buying one share in the ETF, an investor effectively purchases a share in all the assets held in the fund. An exchange-traded fund is often themed around a particular collection of stocks. The return of an ETF depends on the investment it owns. This means that if the investments perform well, the price of ETF will increase. With that being said, let's talk about the best ETFs that can help you become rich. The first ETF we have on our list is Invesco QQQ ETF, which tracks the Nasdaq 100, an index of the 100 largest non-financial members of the Nasdaq stock market. The ETF is dominated by tech companies, and in an era of big tech dominance, this ETF has proved to be a lucrative investment, providing a return of 25.9% annually over the last 3 years. The expense ratio on QQQ is just 0.2%. Since the Invesco QQQ ETF passively follows the Nasdaq 100 index, its price goes up and down along the Nasdaq 100. Investing in this ETF is an excellent way to get the rewards of investing in tech stocks without having the experienced risk of betting on individual companies. The top holdings of the Invesco QQQ ETF include Apple, Microsoft, Amazon, Facebook A shares, Tesla Motors, Alphabet A shares, Alphabet C shares, Nvidia, PayPal, and Adobe Systems. The price of one QQQ share at the moment of making this video was $358. The next ETF we have on our list is SPDR S&P 500 ETF, which is the largest ETF by assets under management. This ETF has $360 billion to its name and it's extremely liquid. It is also the oldest US listed ETF and typically tops rankings for the greatest trading volume. This ETF tracks the immensely popular S&P 500, which comprises 500 large and mid-cap American stocks. These stocks are selected by a committee based on market size, industry, and liquidity. Nearly 25% of this ETF is invested in the tech sector. In fact, the top 10 holdings of the SPY ETF are heavily weighted in tech companies like Apple, Microsoft, Amazon, Facebook, Tesla, etc. According to Investopedia's report, the SPY is a well-diversified basket of assets which allocates its fund into multiple sectors, such as 24.19% information technology, 13.82% healthcare, 13.55% financial services, 11.18% communication services, 9.04% industrials, 7.17% consumer defensive, 10.99% consumer cyclical, 2.86% utilities, and 2.52% real estate. Each share of the SPY ETF would cost you $431 at the moment of making this video. The Vanguard Total Stock Market ETF is a well-diversified ETF that holds more than 3,500 stocks and tracks the performance of the CRSP US Total Market Index. This fund has returned 7.12% since its inception back in the year 2001. This ETF includes small, mid, and large cap companies and is managed in a passive manner. The top sector of this ETF is also technology, with Apple, Amazon, and Microsoft being its top 3 holdings. These companies make up 12.6% of this ETF. The expense ratio is 0.03% and one VTI shares price was $222 when we were making this video. It's an open-ended fund that has a turnover rate of 4.1%. By investing in this ETF, you will get effective exposure to all the publicly traded companies in the United States market. The performance will match the total aggregate performance of the US stock market. And according to a report published by the Motley Fool in May of this year, over long periods of time, Vanguard Total Stock has vastly outperformed large swaths of expensive fund managers and other active traders. And then we have the Invesco S&P 500 High Dividend Low Volatility ETF, whose price was $43.99 at the moment of making this video. The objective of this fund is to match the performance of the S&P 500 Low Volatility High Dividend Index, and I personally own this ETF and I'm collecting that sweet dividend payments every month, guys. This index fund consists of stocks in the S&P 500 index that have historically provided high dividend yields with lower volatility. This ETF pays a monthly dividend and is often considered one of the best dividend ETFs for passive income. According to a report published by ETFtrends.com, the fund generally will invest at least 90% of its total assets in the securities that comprise the underlying index. A large portion of this ETF is allocated toward mid-cap value and large-cap value. The top 10 holdings of this ETF include Iron Mountain Incorporated, ExxonMobil Corporation, Lumen Technologies Incorporated Ordinary Shares, Kinder Morgan Incorporated Class B, Altria Group Incorporated, Philip Morris International Incorporated, Chevron Corporation, People's United Financial Incorporated, AT&T Incorporated, and International Business Machines Corporation. Lastly, we have the Vanguard S&P 500 ETF, which is an index ETF that tracks the S&P 500. This ETF contains all 500 companies in this particular stock market index. And we all know that S&P 500 index funds are well known for being strong and steady investments. And although they experience volatility from time to time, chances are higher that you will see positive long-term returns. It was the year 2010 when VU was established and it has reportedly earned a 15% average annual rate of return. Isn't this awesome? According to a report published by the Motley Fool on May 10th of this year, the net expense ratio is a mere 0.03% each year. This means that if you invest $1,000, you will only lose $0.30 to fees. I would say that this is pretty exceptional considering the diversification you're being afforded. Another reason to invest in the Vanguard S&P 500 ETF is the long-term performance of this ETF. In the end, I would say that ETFs are also excellent long-term investments. You get a chance to invest in dozens of hundreds of companies at once, which provides you instant diversification. And investing in these 5 ETFs can potentially make you a millionaire over time. Well, thanks for watching the video, guys. If you liked it, make sure you give it a thumbs up and share it with your friends. And also, don't forget to follow us on Instagram and Facebook so we can keep growing as a community. If you have not already subscribed to Glory Investing Show, smash that subscribe button and press that bell button so you will be notified each time we upload an interesting video on this channel. And while you wait for our next episode, check some of these 2 videos on your screen. We will see you there. Take care and stay tuned.